Hello traders, today is 13th of June. My name is Devon Hornsey. I'm a market analyst at YouTrading, and today I'll be looking at the week ahead. Okay, before we actually get into the charts, just looking at the week ahead on the calendar, we can see that today has no tier 1, tier 2 data, but we did have UK estimates for GDP, which came out a lot worse than expected. So we are actually seeing the pound flows turn negative. Tomorrow we get a US PPI month over month, so that's going to sort of show whether or not there's still inflationary pressures rising in the PPI. Last Friday we had greater than expected CPI readings, so we are having in the sort of markets, when we look at the charts, we're seeing that the US dollar is actually repricing based on expectations for what's going to happen on Wednesday. Moving into Wednesday, we've got Chinese industrial production year over year and retail sales. Obviously, they've had lockdowns and they started to see an easing of lockdowns, but they're having to reintroduce lockdowns in different parts of Shanghai because they've got a zero tolerance policy for COVID. So obviously, looking for negative numbers, but hopefully not as negative as the previous sort of reading. Moving into the US on Wednesday, 1:30 p.m. here, core retail sales and retail sales month over month. The core retail sales here, 0.8%, which is greater than the previous reading. Retail sales month over month, 0.2%, which is lower than 0.9%. So if prices of goods have risen, and the same amount of people are, buying the same amount of things, then they're having to spend more. So we might actually see retail sales go up. Firms that are selling stuff, are going to make more money because they're selling stuff, but they might not be selling as much stuff. So it really does depend on how much goods are actually being sort of transacted, even if the transactions are rising. That's going to be the market focus, is like, are people buying more or are they just spending more? Going through, then we'll have ECB President Lagarde speaking. Obviously last week they sort of had their sort of big say on the markets. Nothing's going to change there, I don't think. But Fed funds rate, FOMC statement, and then the press conference by Fed Chair Powell. Market is expecting a 50 basis point rate hike as foretold by Fed Chair Powell last time, and we are expecting another 50 basis point rate hike in July. But with the rising US CPI above expectations, to like new 40-year highs, they could surprise us with a 75 basis point rate hike. So if that happens, there's going to be a lot of questions asked in the press conference, and we're also going to see the market reprice based on their decision. Going into Thursday, employment and unemployment rate for Australia, a seasonally, positive sort of time of the year. So looking for a big increase in the employment change. Unemployment rate should come lower, so that'd be good for the Australian dollar. However, if the US dollar is increasing and China's data is weak, then Australian dollar after this reading could even be like coming lower. SNB policy rate, so the Swiss National Bank looking likely to keep their rates as is, but they'll probably reiterate that they are going to intervene in the forex market should it be necessary, as the MPC and official bank rate from the UK bank is likely to go up by 25 basis points and have some sort of negative predictions for the UK economy. So a sort of dovish rate hike, as has been in the past, or they've raised the rates up, but sort of the outlook has always been sort of more pessimistic, and the UK's pound has declined. And then going into Friday, we've got Bank of Japan's press conference after their monetary policy statement. They're likely to keep everything very loose. So we're looking to see the yen depreciate against the US dollar and other crosses. So that's kind of the economic calendar. Wednesday for me is the big day. Obviously, Thursday is also a big day if you're into the pound or the Swiss or the Australian dollar, in a trade. But I would probably wait to enter anything until after FOMC's come out with what they're going to do, and then we'll adjust accordingly on Thursday. So moving over to the charts, we've got Australian dollar versus the yen. Like we said, we were looking for a pullback, possibly to either this swing high here, so around the 94, or all the way back down towards this breakout level around 91. The Australian dollar versus the yen is coming lower based on the possibility that China is going back into lockdowns. Australian dollar versus the US dollar also dragging the Aussie yen down as the US dollar appreciates. That's bad for commodity pairs. We're seeing the Australian dollar come down to see we get back into this big red candle here around the 0.69. If we break through that, if the US dollar continues to go higher, then we'll be looking for a much larger extension to the sort of downside. So if we go from the high to the low, back up to the sort of little turn here at the 200 period moving average, 1.618 would be a good target to the downside. So 0.6 would be a possible push lower. On the flip side, euro versus the Aussie generally goes in the opposite direction. If this can't get back above this double top here, back above the 200 period moving average, then the Australian dollar versus US dollar is very unlikely to keep collapsing. But if the Aussie US dollar does keep going lower, then we're looking at the euro versus the Aussie, looking to see if we get back above this sort of resistance, back above this dynamic resistance. If you look to the left, we've got 1.54 on this swing low. But if we get through that sort of level, then this market structure here, very impulsive to the downside, could quite easily see prices cut right back through that up towards the 1.58. And this morning I spoke about the euro versus the pound. That's been sort of compressing under the 0.86, but supported by this 200 period moving average after breaking out. So we're making higher highs, higher lows, looking for a further breakout. But if we get back above the 0.872, then again, there's not a lot of market structure up until 0.885, 0.89, possibly all the way up to 0.9 here, where we saw the price action break through the 200 period moving average. Now, one trade that we are in, and we've taken profits, so we're essentially at break even. Even if we get stopped out, we're seeing that the euro versus US dollar, the short that was signaled back here on the 1st of June, has sort of played out as expected. I have now moved the take profit lower because of that US CPI reading. I think the US dollar is going to appreciate. I think we are going to come down and sweep this swing low rather than sort of stop at this sort of demand area. I think now we're sort of pushing harder because of what happens potentially on Wednesday. And if we look to the left, we've got a double bottom from 20th of December, sort of 2016 to end of December 2016 to early 2017, and this low here from May 2022. It's going to be lots of stops underneath there. So I think we get a push through, and now I've sort of pushed my take profit to a target, which you kind of need to go to a weekly chart really. And you can see here, we had this impulsive move after this breakout. So that's kind of where I'm aiming for now. So 1.012 is now the new target to the downside. Like I said, UK estimates this morning for GDP came out a lot worse than expected. If we just go to an hourly chart, we can see after US CPI on Friday, the pound versus US dollar collapses, the US dollar appreciated, and we're just seeing further momentum to the downside now, looking to see if we can take out this swing low here from around 1.215, and then possibly push in for a measured move down to the 1.18 to the 1.175. So that's kind of a big move to the downside should US CPI make the Fed surprise the market with a 75 basis point rate hike. Dollar versus the yen popped up to 135, pull back a little bit, looking to see if any of these balance areas act as support, looking for a turn to the upside. I do think if we just go back to a weekly chart, because we touched the 135, if we just sort of scoot out, that's basically left a double top now from the 2002 sort of level. I think we test through that now and possibly up into this 142.5. Now on Friday we had a big sell-off in equities, and that's carried on into today. So we're seeing the equities come lower. Here's the UK potentially still the bulls have a little bit of hope on this chart because we have got dynamic support underneath. We've got this swing low here, so there could be some demand around the sort of 7,000, sort of 7,050. But if we go to the S&P 500, we gapped down this morning, looking to see if now at the US Open, there is a push to sort of close that gap. If they close that gap, but don't push any higher, then we're going to see a bigger sort of move to the downside, looking towards the 200 period moving average, some swing lows as targets potentially to the downside. Depending on what happens at the US Open. If the US Open closes the gap and then carries on higher, then they've kind of done what they need to do. They've grabbed the liquidity from underneath this swing low, and then they're going to potentially, trap a lot of short sellers. However, if this low from Friday holds as resistance, then I think the momentum and sentiment to the downside is the kind of way we should be looking. But I'm not going to do anything until I see what happens at the US Open. And if you look to the Dow Jones Industrial, there's still a little bit lower to go to sweep that low. The Russell 2000 still a little bit low to go. Hence why I'm thinking the S&P 500 may have just sort of fooled a few people to, getting into shorts. But this gap is very important now. Going down to the NASDAQ, again, same as the S&P 500, but we have got this dynamic support from the 200 period moving average. Looking to the left, this is like a weekly chart. So, we can see that the weekly very rarely gives up on the 200, especially in an uptrend. It would be significant if we were to close below that on this chart. Brent on the weekly coming lower. If we just go back down to the daily, we can see that on Friday, we had sort of confirmed a swing high, pushed up. Now we haven't sort of tested the low from Thursday. So if we were to test that low and that was the hold as resistance, then it'd be nice to see the inflationary pressures from energy coming off and making everyone else's life a lot easier. Gold, big push up as traders decided that gold would be a great inflation hedge. But today we're seeing a lot of that candle get unwound. We're definitely down to the halfway mark. If this halfway sort of level sort of holds, we're looking back to Thursday's high now as potential support. If that does hold today, then maybe we do go a bit higher. There is a slight gap up here, 1936, all the way up to 1970. So potentially there are targets to the upside, and there is definitely liquidity above these swing highs. It's just whether or not this break above the sort of relatively equal highs between the 3rd of June and 24th of May. They broke above that. They've taken the liquidity now and looking to see if they've just trapped a lot of traders back into being long, and they're going to take it lower, which is my preferential. Okay, that's it for the week ahead. Wednesday is definitely the focus. You can definitely hold back on trading until after that data. And then obviously you just need to sort of swerve the pound and the Swiss franc on Thursday. All right, good luck this week, and I'll speak to you again tomorrow.